The bulls are so strong in 2025, and people are saying that we are headed for a bubble that's going to explode. But I'm here to tell you there's a comparable year for this, and that is 1995, where similar things were taking place. And it was really the start of a massive move higher, and it potentially can give us a playbook for where we currently are today. So, in this video, I want to share with you how 2025 is very much similar to 1995 and why this bull run could just be getting started. Check it out. What's going on, everyone? Jeremy Ritz here. Courage pays better than fear trading. Here with a quick video to talk to you about how 1995, yes, a long time ago, is very similar to what is happening here in 2025. So I want to go through the charts with you, but I want to read through some of the things that were happening back then that have very, very strong parallels to today and why that could mean that we're just getting started with this bull run. A lot of people recently have been talking about how we are in a bubble and this thing's getting ready to explode and stocks are getting ready to drop. But I'm going to show you if 1995 is any bit of a guideline or a playbook, we may just be getting started. So in 1995, we had a massive tech rally. This is when the internet was really starting to get pumping and pushing. And that parallels today with AI. Unless you've been living in a cave, you know how much AI is dominating the headlines, the markets, and it looks like there's no slowdown to that. And then also, in 95, the Fed began to pivot to easing fiscal policy. And they were on a rate increase cycle. And then they started lowering rates, which injected liquidity into the market and started pushing things up higher. And we also had expansive and explosive multiple expansion where companies' earnings were just astronomical and that pushed things up. And it was the early part of the cycle for the internet, for tech related to the internet space. And if you think about AI, you hear Jensen Huang, CEO of NVIDIA, he's the godfather. If AI was a company or a country, he's the president. And he talks about how we're just in the early innings of the AI boom, right? And so very similar to 1995, when there was early cycle acceleration around the internet, we're in early cycle of AI. And you had mega caps dominating. And back then, it was the four horsemen: Microsoft, Dell, Intel, and Cisco. And just replace those today with your NVIDIA, your Tesla, your Meta, your Microsoft is still around. And then investor sentiment. People were getting excited. Retail was getting excited, putting their money into the markets, all the liquidity. And now with borrowing costs coming down, you're going to see even more liquidity come into the markets. But then also, too, this set us up for that bubble that didn't pop until 2000. So 95 was really the start of this. And so let's just go in and look at the charts here. You can see this is 95. It was straight up. And I'm certain that back then people were saying the same thing. Oh, this thing has to come down. It can't just go straight up. But if we look at the gains here on the SPX from the beginning of that year to the highs of that year, it went up 36%. So there was a ton of movement higher. And just look at these little retracements. They weren't big at all. You had 1.99%. We had another 1.9%. Here's another one. Let's just measure these out. 2.43%. Here's another one. 2.26%. This one here is 2.09%. We have 2.1%. What do we got here? We have a 3.39%. Wow. You're getting the picture, and I'm going to explain what my purpose of this here in a second. 2.49%. And then we have this guy here. We have 3.04%. And right here we have 2.94%. So very similar to what we've been seeing in 2025. We can't, we can't get that 5% pullback. You have to go back to April. So it shows that there is still more meat on the bone for this bull run, and potentially we might not have another 5% pullback for some time. And you'd have to go to 96. And if you go from these highs here from May 23rd, it wasn't until, let's see here, July 15th that we actually got an 11% correction here in the markets. So really how I've been studying the charts and looking at this, trying to find a comparable for where we are, I think we're following the 1995 model more so than anything. In a correction, a dip, or even a short-term bear market, more than likely is not going to come until 2026. And I said yesterday in the episode of Driven that I put out that we're going to hit 7,000 by the end of the year. I think that that's on the table, if not even higher, and we'll probably continue to push up into 2026. So what are your thoughts? What do you think? Do you think this is a good comparison? Again, we keep waiting for the ball to drop. We keep waiting for the retracement, the correction. We know it will come, but it might be a ways away if 1995 is any sort of a precursor for what we're experiencing this year. And remember, history doesn't repeat, but it rhymes. And 2025, 1995, makes sense. I appreciate you guys watching. As always, make it a great day and honor the moment.